Okay, just before we start, I just want to mention that this is not a nothing in here is basically a financial advice. So I would highly recommend you guys backtest this yourself and do it yourself and then see if it works for you. Okay. With that being said, I want to show you guys. So I actually made a little actually streamed a few days ago about how I approach the markets. So this is basically like added to what I showed you guys on that day. I think it was like 2 days ago, before my right before my Fortnite streams. Right. So first of all, what I want to show you guys here is it's a simple thing. I just want to make this really quick. Okay. So obviously, to keep things simple, I entry from order blocks. Okay, so if you see this right here, this is the let me just get rid of this for now. If you see this right here, this is where the imbalance was caused. So as you guys can see, the reason for this to hit full TP, and you see how it's going away. Now what I want to make sure that you guys know is the fact that when there is a buy side liquidity or sell side liquidity draw, target the closest draw on liquidity. For example, in my case, right, so we know price moves from internal range liquidity, as in fair value gaps, to external range liquidity. But the thing is, okay, so as you guys can see, it aligns with the overall order flow. So as you guys can see, if I decide to like sort of jot down where the market is flowing, as you guys can see, we're bullish now, right? We've shifted from a sell program to a buy program. As you can see, we have this change of character, and we have this structural shift. So basically we have shifted from bearish to bullish. Okay, it's simple as that. But what I want to make sure you guys know is the fact that when you are, okay, for example, like, okay, yeah, sure, like at some point it will come down here, but the thing is, when you want to make real trades, right, when you want to really trade, you have to sort of go for what's the closest nearest draw on liquidity, right? You're not trying to wait until like tomorrow to take a trade, right? So the thing is, when you want to wait for that kind of scenario, you don't also want to, like, okay, this is something that I was doing wrong. Okay, so you don't want to know what I use supply and demand for my unclaimed order blocks. So unclaimed order blocks entries towards opposing unclaimed order blocks to TP, right? So basically, like I TP right before the opposing unclaimed order block. Okay, but the thing is, okay, the reason why it works, but then the reason why it's super high risk is the fact that over here, as you guys can see, right? Yes, so let's say, for example, this would be the perfect entry if you guys are targeting something like, let's say, here. Okay, no, not even here. Let's say you guys are targeting something like here. Okay, so you see this level has not been, this supply level order block has not been claimed, as you guys can see. But the thing is, think about this, is that this will only be retested after a bunch of back and forths in this range. Now, if you are planning on entering from here and taking it all the way up to here, right? Or even like, it doesn't even need to be this distant. Okay, it could be somewhere like even here. Okay, I'm just using this as an example. This is not really, you get the point, right? So like, it could be even here. But if you are taking this towards a drawn liquidity, towards a supply level order block, do not do that. If you are entering in the middle of price action, so for example, as you guys can see, that I'm entering from the middle of price action, right? And there's obviously lows here. So the reason why I'm saying target the closest drawn liquidity, okay? Closest, I really mean that, okay? This is the closest. Now, as you guys can see, you have this. Let me just explain how this works, so that way you guys can understand what's going on here. So obviously we've shifted structure from bearish to bullish. We also have had a higher time frame PDRA. So as you guys can see, we're within a higher time frame PDRA. So if I zoom out to, this is on GBP USD, and if we zoom out, as you guys can see, we have this, right? So this whole level is now, this is a strong low. As you guys can see, we see that in action over here, right? Because the overall structure is bullish. See, impulsive corrective, impulsive corrective, impulsive corrective, impulsive after. Okay, so this is on the highest time frame. So I use for over 15 minutes, 1 minute for reference. And as you guys can see, we have this order block and we have shifted structure from there. So this is a strong low and that's been protected, which is further confirming the fact that we are on a corrective move and we're going to be going bullish right after. Okay, and we have also shifted structure in this few candles over here on the 4 hour, right? So if I zoom out, as you guys can see, we've gone from bearish to what? Bullish on this, right? So what I need to mention here for all of you guys is the fact that when you are, so for example, if I had to use my snipping tool, and if I had to, where's my snipping tool? Okay, so if I had to snip right here, so over here, as you guys can see, right, this Right, let me show you guys. Pretend as if this didn't, sorry, pretend as if this part just didn't exist. Okay, so obviously you guys can see that there's an imbalance here, so I would target this and put my stop loss at this low, right? So once I see this 1 minute market structure shift, right, 1 minute, I'll just call it one MSS, basically 1 minute market structure shift, and then once you see this, you can take it towards the closest draw on liquidity, that is this level. Okay, not any higher amount. Okay, not any other higher amount that's like right above. Okay, you want to go for the closest draw on liquidity. Now mind you, you're getting the best risk to reward from this. In fact, from this trade itself, if you guys want to see this in action, as you guys can see, it went and hit full TP. It's 3.35, right? Just by putting your stop loss at this. See over here. Right? If you want, if the level is not too far away, for example, like if you are, I mean, ideally I would say like even put your stop loss here, but at that point you're getting much less RR. So I would say like if the stop loss is not too far away, as in the strong low, this one is not too far away, put your stop loss here, right? It's as simple as that. So I hope this stream is helpful for anyone. This is a mistake that I was making for some time, and I learned from it, and that's how I was able to capture smaller moves that make more money than larger moves that basically flip on your head. Okay, so yeah, that's pretty much what I want to tell you guys, and I hope this is clear from this example itself. Don't target any of the higher levels. There could be like higher levels that need to be balanced out, but the thing is, it could flip on your head and then target like rebalance some lower level and then go back towards the higher levels, like higher point of interest, right? So yeah, that's why I said always target the closest draw on liquidity, because you don't need all this information or a 1 to 16 RR trade, or even like a 1 to 6 RR trade to make money, because it's better to always have something than have nothing, right? So yeah, I hope this helps you guys, and I hope anyone can learn from this. And